Hello, everyone. I've got my tie off and my shirt sleeves rolled up because we're going to do a little bit of work on this one using some real numbers with a real case. So I get a lot of questions about critical illness where people will say, well, why don't I just save the money? There's a sense that giving money to the insurance company is somehow meaning that they're not going to have their own savings. People would rather use their own money in the event of a critical illness to compensate for time off work or for unexpected costs that go along with critical illness. And I will talk about unexpected costs because they are plenty. But this is an actual case of a healthy 30-year-old female who I proposed getting critical illness for. And these are the numbers that we used that helped her decide that it was something that made sense in what she was doing. So the assumptions are 30-year-old healthy female, and she is currently contributing $250 into her RRSP in a 29.7% tax bracket. It's not uncommon. There's lots of people out there like that. Right now, she has $10,000 in her savings in the RSP, and she's going to contribute $250 a month. If she continues to do that and never gets sick, never loses any time off work, and continues to do that until age 65 at a modest 5% rate of return, it's not unexpected to think that at age 65, she'll have $333,000 of RSP savings. That is the best case scenario. However, we all know that life is unexpected and bad things happen. So if this same healthy 30-year-old female at age 40 gets cancer, breast cancer, ovarian cancer, skin cancer, intestinal cancer, the list is endless, or one of 23 other conditions that would qualify for a critical illness policy, but for which she may end up taking time off work. If she then has to use up her savings to compensate for that, this is the red line here where the savings are dried up. Now, of course, she's only got as much as she's saved to that point, which would be about $55,000 that she'll take out. But for anyone that's paid attention to my other videos, you know that tax is owing at that time. So $55,000 in her current tax bracket, she's going to pay about $16,000 in tax. So she'll really only end up getting about $38,000 in her hands. So you think you're getting $55,000, but you really don't because of taxes. So if anyone wants to see the numbers behind this, I'm happy to share it. I've got a pretty cool spreadsheet I can show. Now, a year and a half estimating of dealing with this illness before she's working again and starting to save. And the savings are back at zero after a year and a half. So now $250 a month going back into her RSP. She's only, under the same circumstances, only going to have $132,000 of RSP savings to supplement retirement at that point. Big difference. So yes, you can use your own money, but what's it going to cost you? Not only is the tax that had to be paid, but to take $55,000 out to supplement income for a period of time, it's actually cost her $200,000 of retirement savings. But what can we do? Critical illness insurance. If looking at a policy of $75,000 of critical illness benefit paid tax-free upon diagnosis and survival of 30 days, that would cost this same 30-year-old healthy female about $88 a month with a return of premium. What does return of premium mean? If by age 65 you haven't been diagnosed and claimed on the policy, you get all of your money back again. So every penny of that $88 that she puts into that policy, she's going to get back. That's like people tell me it's like savings, but with an insurance protection. So she has the choice of continuing $250 into RSP and having a critical illness policy of $88, or she could redirect $88 from her RSP contributions into the into the critical illness and then reduce her RSP by that same amount. So what does that mean? So the blue line is what she does if she's just going to reduce her RSP and pay into the critical illness. And if she gets sick at age 40. So at age 40, she's gotten sick. She's received $75,000, 75,000 to help supplement her income for time off, and she can continue to contribute to her RSP. She doesn't have to have this year gap. She can continue savings. That blue line is going to continue on along, and she'll have about $280,000 of RSP savings, and she's been off for a year and a half, having gotten sick and received $75,000 from her critical illness policy. That is a much better situation than getting sick and being unprotected. Not as great as not getting sick, which of course is the ideal and we would prefer. But what happens if she contributes to this saving to the critical illness and doesn't get sick? So that's the dotted line here. She doesn't get sick. There's the reason that there is this gap here is because at age 40 she receives $75,000 extra from her critical illness. She doesn't get that. So it continues along, and it's a little bit less here at age 65 in her RSP. But if she's never claimed, she's going to get, and what are my numbers on here? It is about another $38,000 of return of premium for every dollar that she's put in. I'll have to check that number. But the difference here is she'll end up with about 200 and what did I say? 275,000. So there's only $5,000 difference between having critical illness and getting sick, and critical illness and not getting sick. So this bump here is getting her return of premium back again that she can contribute to her savings. So green, best case scenario. Red, we can't control that, but you can take action. I can help you so that you have one or two of the lines here in the middle. And of course, if you put $250 in, if you don't change your RSP contributions and you get a critical illness policy on top of that, it's an even more favorable circumstance. So I hope this is helpful for you to see some real numbers with a real person who made a decision. And when she saw that these are the four options, there's really only four things that can happen. You save and don't get sick, you save and get sick, or you protect yourself with critical illness and either get sick or don't get sick. There's four options. And when you see the difference between the four options, it only made sense for her to take a look at adding that. So please message me, send an email, however you want to get a hold of me. If you'd like to see these numbers, or if you want to sit down and see what this looks like in your situation using your numbers, I'd be happy to do that. It's Mike Riley here with Altitude Freedom 55. I'm really excited to continue to share this information with you. Have a great day.